So hyperinflation, one thing that I think people need to know about hyperinflation is that it's not current CPI rising and costs pushing prices higher, even though that's what we're getting now. Hyperinflation is a step further. It's when the general public realizes that the central banks and the governments are never gonna stop inflating. And by inflating, of course, I mean creating currency and credit out of thin air, like we've seen the central banks do since 2009 or thereabouts. Deficit spending, programs that we see nowadays to try to stop inflation by spending even more, which is crazy, which is what the Germans did in 1923. So yes, when people realize that that's never going to stop and that the debt will never be paid, and yes, the Chancellor in the UK is saying that they're going to pay down the debt, but listen carefully. He says we're going to lower the debt as a percentage of GDP. That's what they're trying to tell you. But it's when people lose confidence in the currency, you know, they realize that the central bankers and the government can never stop inflating. And we saw 2 days ago, Jay Powell in his press conference say, yes, if we over tighten, we're gonna use our powerful tools again. Well, what are those powerful tools? Well, they're the tools of money printing, creating reserves out of thin air, manipulating interest rates, and more deficit spending by the government. And when that happens, the demand for the currency collapses. And that's when the currency loses value. And what does that mean? Well, people will want anything but the currency, so they'll try to exchange it for anything. They'll try to spend it as quickly as possible. And that's when you have hyperinflation. But it's more than just a monetary phenomenon as well. People have to lose faith and confidence in their leaders. And I mean, I've lived for 50 years plus, 58 years, of course. I grew up in a country where we had hyperinflation in Brazil, yet there was very little faith and confidence in the political class in Brazil back in those days, 70s, 80s. But in Europe, what's going on right now is really unprecedented. Also in the United States, look at the division and the social division as well. Those are all symptoms of people losing faith and confidence in their leaders, in institutions, not just governmental, but academic, the press, mainstream media. And the other thing that's really important about hyperinflation, and we saw that in Germany, is the amount of debt in the system. The debt becomes insurmountable and they have to keep the debt going, so they keep issuing. So that's my brief description of hyperinflation. There are a lot of symptoms, of course, and I'm not going to go through them. You can go through my playlist. There's 37 videos there, and in one of them I've talked about all the symptoms. So I wasn't too surprised when I saw this article yesterday, and it's in the Financial Times. I think the Daily Telegraph published it afterwards because I think it's fairly significant. And it's Paul Singer. Well, Paul Singer, he founded, this is the part that I thought was really interesting, because I've been talking about this for many years. I've been highly critical of central bankers because I think they've been dishonest, as you'll see here, about inflation for decades. They have tried to and still trying to tell people that inflation is the CPI. I watched the press conference from the Bank of England yesterday. They never mentioned all the QE they did in 2020, 21, None of the reporters asked them about that, and they're still blaming supply chain and Putin for the inflation detective mind, or whatever you want to call it. Well, it was a speech by Ben Bernanke back in November of 2002, and by then I had been firmly immersed into the Austrian school. I'd been reading about monetary history. I had bought my first gold coins back in the summer of 2002, and when he gave the famous so-called helicopter speech, and knowing that Ben Bernanke was on his way to become quite influential in central banking, I thought to myself, this is very dangerous. This is gonna end in tears. Did I think it was gonna take 20 years? Honestly, not. I thought it might happen after the '08 crisis when they did a load of QE, but that's the thing with the markets. They can remain, and economies and currencies, they can remain irrational for longer than you can remain solvent. That's paraphrasing Keynes, who is not one of my heroes in economics, but in that sense he was right. But yeah, maybe, yeah, it's taken 20 years. In Germany, it took about 9-10 years, because they started inflating the system to pay for World War I, 1914, and then the hyperinflation happened in 1923. The Reichsmark collapsed completely. People lost faith and confidence. Maybe because it was the only country doing it, so it didn't take as long. But now the whole world is on the road to hyperinflation, and that's why I think it's dangerous. So there you go. With that, let's quickly look at where the markets are this morning. Yes, we have non-farm payroll data, jobs data later on today, 8:30 a.m. Eastern time. It's going to be at 12:30 London time today because of the time difference. Usually it's at 1:30. So we've got spot gold, 1648. It's up almost $20 actually. It's up over 1%. The high's been 1650, low's been 1625. Silver, really interesting yesterday. Watching the screen, everything was red except silver. Very strange. Could the physical shortage be starting to affect the paper price? It might be too early to say yes, but right now it looks pretty good. So we've got spot silver at 1980. It's up about 35 cents or 1.8%. Key level in the spot price is going to be 20, of course. We've knocked on that door a few times this week and we failed. The Dow futures is up 96 points, 1/3%. NASDAQ 100 futures up 0.5%. S&P is up 1/3%. S&P future. FTSE is up 0.75% at 72.36. The Euro Stoxx 50 is up 0.75 as well at 36.17. To the currencies, sterling is up just under 0.5% at 112.09. The euro is up 1/4% at 97.72. The dollar is down 0.5% versus the yen, 147.60. Dollar is down 1/4% versus the Swiss franc at 101. And the dollar is down 2/3% versus the yuan at 728. The dollar is down slightly versus the ruble, around 62.50. Aussie dollar. Aussie dollar is up 1%, 63.52. The dollar is down 3/4 versus the Canadian, 136.44. And the Kiwi dollar is up 0.8 at 58.15. To the general commodities, WTI crude is up 2%, 89.50. Brent crude is up 1.8 at 96.08. And high-grade copper is up 2.5% at above it's above 350, and U.S. nat gas is up 3% at 625. Let's check the TTF gas futures. That's up 3.4% at 130. To finish off, let's quickly look at the bond markets. We've got the UK 10-year yield down 1 basis point, trading around 3.5%. We got the 30-year down 1 as well at 370. And the 10-year yield is up, well, it's unchanged at 413. And interesting that the 2-year yield, I think, spiked to 5% yesterday. I'm not sure if it really traded there, but right now it's up 1 basis point at 472. So the curve is definitely inverted, even from on a 3-month to 10-year basis. It's inverted. So that's not a good sign. That's a sign of a recession usually, even though policymakers and politicians are going to deny it